Hey, this is John Wooten. I'm a second year computer engineer here in North Avenue, the Olympium dorms, which I think are really cool. As you might have read already, I've got a pretty decent, I'd say, experience in finance. Ran a hedge fund, wrote some books, run a startup, actually in TedX this year for the summer incubator, which is really exciting. So once these finals all wrap up, I'm just very at peace and bliss and grateful for that opportunity and really hoping to take some firms or to act as their transfer agent, which unfortunately gets me to a rather deep level finance term. And that's the shame with a lot of what I want to express here with this talk. This is something I've had kind of in my head, and I don't. Okay, let me just level with you, okay? So basically, every single day for the past 3 or 4 years, I've told myself the exact same. At first I wrote it down and I read it, and eventually it just became part of me. And the objective is by 30, I really want to help masses of people create real savings in retirement by creating an online broker that combines traditional equity, bond, and cryptocurrency markets in a decentralized system that rewards independent money managers, allows everyone to easily invest, opens active trading to the world, and helps replace existing banking systems. The way markets work right now is fundamentally flawed. If you look at just an average trade, there are 11 intermediaries, an average. And those firms, many of them, 4 or 5 of them, are they exist for the sole purpose of taking your money as an investor and moving it into their pockets as an intermediary. It's absolutely ridiculous, and yet it's enabled by a lack of market participants cracking down on it, because the only people incentivized to report it are the ones that have no control over it. There was this instance, again, going back to the main business I'm in right now is the transfer agent business. They're the ones that issue those security certificates for a stock when you buy them, or a bond, stuff like that. There was this one firm in the 80s, and it was right at the precipice of digitalization of securities. So it was like the Wild West for something called the Depository Trust and Clearing Corporation. They're the ones that do all the securities. Again, I wish I had more time to explain all this to you. My TED Talk, whatever. This firm went, and they had an IPO. They went public, and they gave all their shares. You transfer the shares on the transfer agent list, which again is technical. I'm sorry, it's the only way to explain it. The list of all the shareholders. The DTC is on there. That's the one that all the brokers have access to, right? It's the one that all the shares for the brokers are. And again, it's going to go deep, but what they did is absolutely insane. And it's incredible. Okay, so the brokers all went short this stock called Diamond Co. And Diamond Co had shares they issued, and what they did is, because of the way that settlement works with the DTCC, which is the back end of all those central exchanges. I'm so sorry about the microphone there. But because of the way it works, what they did is they were able to short the stock with what's called a naked short sale. It's a fairly common term. It was outlawed in 2008. It's when you short a stock without borrowing it. The brokers simultaneously all decided to short Diamond Co. They sold at the open market 4 times the amount of shares that were issued by the company to go public. So they issue these shares in an offering, and these firms go and they take those shares. They sell 4 times as many as they are, creating an incredibly large amount of artificial speculative downward pressure, because you can't even buy 4 times the stock. And this is where it gets crazy. Because after this happened, people realized, they're like, yo, the way they were able to do this because the DTCC held all the securities in their name on the transfer agent ledger, the transfer agent being the one that maintains the whole official list of shareholders, right? I'm so sorry, there's so much more to that, I just don't have time. And so they asked to have the shares registered in their name because they were the initial investors in the IPO, and they're the ones that are legally entitled to have the shares registered in their name, so that they could, at the time, get paper certificate securities that said they own the shares, which is their legal right as a shareholder. by all means. And this is where it gets insane. The brokers would not give them direct registration on the transfer agent ledger. They said, nope, not going to happen. The reason why is because if they did do that, they would have to submit 4 times the amount of shares to the transfer agent. And unlike the DTC, the transfer agent can't just do that. You just can't. They have to report to the SEC very regularly. And so, oh my gosh, it was awful. But basically what they did is they denied the shareholders their rights to have paper securities or to have book entry representation of their securities. Again, finance terms, I'm sorry. And they shorted the stock to bankruptcy. It went to zero and it was into oblivion. Poof. The brokers booked hundreds of millions of dollars in gains by shorting more than there actually was, by selling and selling and selling, what eventually became worth nothing. So they just got to keep all the money that they got from selling it. And the actual investors, the fundamental shareholders, the people behind the company's offering, all lost everything. Absolutely insane. Not a lot of people reported this to the SEC. Nobody cared. Not a single repercussion incurred after this event, because the people responsible for punishing things like this are the ones that do it. Like the DTCC or these brokers, these exchanges, these dealers. They're the ones who enforce those rules, and they're the ones who broke those rules. And that's just one example with Diamond & Co. that I have always found incredibly fascinating, especially now, given our more recent work in the transfer agent industry. It's just an incredible motivation for the decentralization of asset exchange and management in a very open, distributed, transparent way, so that everyone, I mean, there are billions of people on this planet who have no bank account, no inkling of a chance to ever invest in a quality U.S. stock or really almost any stock. It's ridiculous how many people are so underserved. And similarly, as you might have seen by my brief little snippet on decentralized asset management, it's the exact same thing with it. It's just there's so many instances like this where the incentive models in traditional financial markets are just backwards and incredibly ripe for disruption. And so that's why I'm really excited to share this kind of information with you, because it just has such a big impact, since very, very few people actually understand. Like, people are like, oh, we don't like Wall Street. Some people, say that, but they don't really understand, like, oh my gosh, XYZ, these are all, like, there's just so many, I could talk all day. I hope you found value from this, and I'm excited to continue the conversation however you want to do it. So thank you guys so much. Shout out to Max. He apparently is I'm going too long. Thanks, guys.